Oh,
Yeah, hello, sir.
okay. Can you hear me now?
Yeah, I can hear you.
All right. Good evening and welcome to this class.
Good evening, sir.
So we're just going to quickly do a recap of the last class.
Mm.
Uh, the high point of the last class is support and resistance, right? And we did mention that for a support or a resistance to form, you have to have a collection of five candles,
Mm-hmm.
right? Have a collection of five candles, and these five candles should be in the order where you have candles to the left, two candles to the right that are either higher than the center wick or lower than the center wick. Okay, so if the two candles to the left are lower than the center wick, it means the center wick is your resistance. If the two candles to the right or two candles to the left are higher than the center wick, it means the center wick is your support. And we did say that if you have a support, okay, so for instance, look at this chart. We say if you have a support, the market will buy, and if we have a resistance, the market will sell. Okay, so I want you to look at this chart. Uh, you agree with me that this place is a support, right?
Yes.
Because I have two candles to the left and two candles to the right that are higher than this center wick low. Okay.
Mm-hmm.
Now you also agree with me that this place right here is a support, right? I have two candles to the left and then two candles to the right that are higher than this point. Okay. And
Mm-hmm.
now I want you to see how this market rally up, rally up, rally up, rally up, rally up. Can you see that from here, where the market created this support, to here, where it created this resistance now, there is no support or there's no resistance in between.
Yeah.
Can you see?
Yeah.
Okay? So the market creates here a support and came here and created a resistance, and then immediately here created a support, and then this support rally all the way to this place. So let's say you are buying this market. Let's say you're buying this market from anywhere here or here, anywhere here you buy it. At this point, where this market created this candle and this candle, you would have said close the trade. So you buy from somewhere here to somewhere here and you close the trade. Can you see how profitable it is?
Mm-hmm.
Very profitable, right?
Yeah, it
So,
is.
so that's the way support and resistance, work, or that's how effective support and resistance, are in the market. And like I said, support and resistance are they are the two most used concepts in the forex market. And I gave you a reason why. I
Mm-hmm.
said support and resistance is also demand and supply in your economics.
Mm-hmm.
Okay. So there are forces of demand and there are forces of supply. When demand is high, price will be high, right?
Yeah.
And of course, vice versa. So in forex market, you are looking for demand zone and supply zone, and then you can make your informed decision of how you want to enter the market or you don't want to enter the market. So whenever you see demand zone, what it means is that there are more buyers than sellers in the market. Whenever you see supply zone, it means there are more sellers than buyers in the market. Okay.
Mm.
Now, so today, what we want to do is the candlestick itself. So this is candlestick. Now, what you see on the chart, you know, this movement, this market moved from this point to this point. It's not just only one type of candlestick. You are saying this is black, this is green, this is black, black, green, black, green, black. Of course, because the market is going up, you will see bigger bullish candle, and then you will see smaller bearish candles. Okay, so that's
Mm.
how the market went up. So now we want to talk about this candlestick. You know, the decision to trade lie strongly on candlesticks, right? And so it means that we have to kind of understand some relationship, about the candles. So, um, so yeah, we're talking about trading with the Japanese candlestick. Okay. So there are other tools we use to trade. We have the line chart, we have the bar chart, histogram. There are a lot of stuff we use to trade. But candlestick changes the game by introducing uh, more information, to the trader. So candlestick has it shows you a whole lot of stuff that you need to be able to make a decision. Okay. So if
Mm.
I just give you this two candlestick like this without any information, let's say the arrow is not there. Okay. You cannot tell me whether the candle is going up or whether the candle is going down, right? You won't tell. If I remove the arrow there now that shows direction, you cannot just look at the candlestick and say this white one is going up or this. Remember, the color doesn't matter. I can change the color to green. I can change the color to pink. I can change the color to black,
Yeah.
right? So,
Mm-hmm.
so the color makes no difference. The real thing that makes the difference is the properties. Okay, so there are five key properties of the candlestick. One is the open, two is the close, three is the high, four is the low, and five is the body, the candle body. This space here, this space, the whole of this space is the candle body. So this high and low, they are the weak. Okay.
Mm-hmm.
Now, the reason why they are weak is that in the process of time, when this candle is forming, the market actually came down all the way to this point. Remember, this point is a price value. Okay. The market
Mm.
came down all the way to this point, and then there are more buyers that jumped into the market that drives the market up, and then the market went back up. But now, if the market just go back up, there's nothing to show that the market got here. So the market leaves an imprint, and that is the week. So when the
Mm.
market pulls back, if a stranger just comes and sees the week, he knows that, oh, there was some point in time where this candle came all the way down. So in order to show traders what has happened, the market leave what we call a wick or a shadow. Some people call it different called shadow. Okay, for the traders to be able to use to analyze their trade. But then I said if I remove this arrow and I remove this arrow, you are not going to know direction where the candle is going, right? But now
Yeah.
the easiest way to know the direction is the open and the close. Now take note. If the candlestick are not closed, it does not have a name. So don't be deceived that you are in the market, the market is moving and it's showing like the market is buying. Don't be deceived. If the candlestick does not close, it does not have a name. It is not bullish, it is not bearish. But when the candlestick close and you see the close point that it closes higher than where it opened, you say it's a bullish candlestick. If it closes lower than where it opened, you say it's a bearish candlestick. That's the only time the candle have a name. Okay. So for instance, let me look at that chart I was looking at just now. Look at this chart. Mhm. See this candle. Look at this movement. And this movement is a very nice. Can you see that the market has not done any bullish candle? None of the candle has closed bullish from this top here all the way to this point.
Yeah.
Everything is bearish, 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 bearish. Have you seen that?
Yeah.
Now this is a current market. This market is moving. This is live market. Okay, this is real market. Now this candlestick, even though it's showing black. Now, so let me explain it to you. If the candlestick opens, okay, if the candlestick open now, candlestick open from here, anything above this place, it will be showing white. Anything below this place, it will be showing blue. Do you understand me?
A bit lost.
Okay, well, let me go to the chart. Let me go to the chart and see. Look at where this candlestick open from. Did you see what just happened now? Can you see what just happened now? This market just went back up immediately.
Yeah.
Okay. So this place is where the candlestick open from. This place that the candlestick open from now.
What about the black one?
Any movement below that place, the candle color will be showing black. Any movement above that place, the candle color will be showing green.
Oh, what does this mean? The candles are having two colors. What's the meaning of the?
I told you the other time that this candle, this line, this one that you see, this blue and red, they are like Hanson candlestick.
Oh, okay, okay, okay.
If I right click on it, I can remove it. I can say remove the Aikiashi, and then you are seeing only the candlestick.
I think I understand it a bit more better like this. That
Very
one is
good.
very confusing me. It's like I really don't know the level that the candlesticks are.
Yeah.
That is a bit
So
confusing.
look at this now. You see this candlestick now, this current one. This
Yeah.
is the open point. Are you seeing the opening point here?
Yeah.
Now, if this market moves to the side, a movement above the opening point will change the color of the candle to green.
Okay.
The movement below the opening point will change the color of the candle to black.
Mm.
But now, this is a 1 hour candle. The time has not expired. The 1 hour has not been exhausted. So in as much as within the 1 hour, the candle has not closed, you cannot say that this candle is a bearish candle or a bullish candle. That's it. You have to wait for the candle to close. And when the candle closes, if the closing price is lower than the opening price, then you can say the candle is a bearish candle. But if the closing price is higher than the opening price, then you can say the candle is a bullish candle. Is it clear?
Yeah, it's clear.
All right. So candlestick, they tends to present more information as compared to other tools that are available to trade the market, and that's why they gain so much popularity. Okay, today, and
Mm.
then they come in different formation, come in different pattern, and all that. So it's very key and very important for us to understand in depth the concept of the candlestick. Some people call it the anatomy of the candlestick. Okay.
Mm. Mm.
So the bullish candle is the white and the bearish is the blue. Okay. So now candlestick are divided into two broad categories, right? We have the indecision candles, and then we
Mm.
have decision candles. Now, indecision candles are candlestick that shows to you that the market is neither going up nor going down.
Mm. It's not going up, it's not going down.
Not going up, it's not going down. So the market may be ranging.
Mm.
Okay? White decision candlestick are candlestick that you can see and you can use to say, yes, this market is going to buy or this market is going to sell. So the short candlestick are candle you can quickly take decision with and enter the market. Okay.
Mm.
So for the indecision candlestick like the doji star, what happens is the candle open at a price, and then uh, okay, you can
Stop.
hear me?
Yeah, you're talking about the dodgy stuff.
Yes. So the doji star, they are candlestick that have their closing price is very close to the opening price. Okay, and to the up and the downside, they have almost equal length of wick. The wick to the up and the wick to the down, almost the same length. Okay, so call them doji star. So they suggest that the market is neither going up nor going
No.
down.
Mm.
Okay,
Mm.
so when you see them in the market, see those arrows that shows you the doji star, they will not really move the market per se. Okay, and
Mm.
then we have a different type of doji. Uh, we have what we call the bearish dragonfly doji, and then we have what we call the bullish dragonfly doji. Now, if you look at the shape of this doji star, it looks like butterfly, right? They're like a cross. Okay.
Mm-hmm.
Now,
Mm.
if you look at the opening price and the closing price, they are very close. But if you look at the wick to the up and the down, you see that for the bullish dragonfly, the wick to the down is 3 times more than
Mm.
we have to the up.
Yeah.
Okay. Same thing for the bearish. The wick to the down to the up is 3 times more than what you have to the on the downside. So
Mm.
it's very important. This is a decision candlestick, right? Now the reason why you have this doji like this is because when the market closes on a maybe say a previous candle and the market wants to use this dragonfly doji. Now, what this doji star suggests is the market opens and then the market comes all the way down, all the way down, all the way down to somewhere here, and probably met, uh, action of buyers. Maybe more buyers now enter into the market in an attempt to drive the price back up. And they succeeded in driving the price back all the way to almost the opening, okay? Almost
Mm.
the opening price. And then the time finishes and the candle stops. Now it becomes a dragonfly register. Okay, and the same thing goes.
All these, what's it called? All these candlesticks are all indecisive, the both of them.
This and this, they are decisive. They are not indecisive.
Oh, they are decisive.
Yes, they are decisive. They can inform your decision. They can inform your you can take decision with them basically. You can make your trading plan, and then you say, okay, on this trading plan, I will only trade when I get a dragonfly doji candlestick. Yeah, a candlestick. And then when you now see dragonfly doji appear on your on your chart, you now look for a possibility to enter the trade with either a buy or a sell. So if it's a bullish dragonfly doji, you need to buy. If it's a very dragonfly doji, you need to sell.
So bullish is buy, bearish is sell.
Correct. Let's go and bring one more up. Okay.
Mhm.
All right. Good. I'm not fair. Okay. So now, one thing is to see them right in the market.
Yeah.
Another thing is to look at the place where you are seeing them because they may appear, a bullish dragonfly doji star that appears in a supply zone will not cause the market to buy.
Mm.
You understand? So we want a berry dragonfly doji to appear in a supply zone, and we want a bullish dragonfly doji to appear in a demand zone. That's where it makes more sense.
Mm.
Understand what I'm saying?
Yeah.
So let's go to the chart and see. So if we have something like this, let's see, let me look for, let's see if we even see the register. The week is not long enough. I have this one here, but the week is not long enough. Let me look for something that the week is long enough. Then I will show you why. Okay, perfect. So this one is not too perfect. Look at this one. Look at this one. This one. Can you see it?
That's the bearish dodgy star. Right?
So this is a bearish dodgy star, right? Okay, good.
Yeah.
Now, this bearish dodgy star, if you move the chart back a little, okay, let's do it this way. Look at this place. See this place. This is a supply zone, right? And then you now come and have a doji star coming from a supply zone. Okay. Now when you have look at this. There's a gravestone. Look at this gravestone doji. This is a gravestone doji. Okay. That is supposed to make the market to buy very well, but it's appearing in a supply zone. So it's not going to buy. Okay. Because it's not going to buy. But now you see this normal doji appearing in the supply zone is what drove the market down like this. You understand?
Yeah.
Okay. So you need to even though you want to see doji to make a decision to trade, you need to be sure that it is coming from a supply zone. Okay. And then if it's a bullish doji, you want to be sure that it is coming from a demand zone. That's when it comes from those levels, it makes more impact. It moves the market better, as compared to when the wrong one is appearing in the wrong place. I saw one good one now. Look at this one. See this one. Look at this one. Look at this place. This is, are you seeing it? This is support on resistance, right? The candlestick that make that place a resistance, look at it. See how effective this one is. This candlestick that make this place a resistance, this is two candles to the left, two candles to the right. The two candles to the right, can you see that this one is a doji star? This second candle to the right.
Yeah,
Immediately
that's a bearish dodgy.
just sell. Condition number one, this is a previous support from resistance.
Resistance.
And then it now gives you a doji candlestick there. What are you waiting for? Just sell the market.
That's a double confirmation, yeah.
Double confirmation, very good. Double confirmation. So you can just go to the market and look for this kind of condition, and then you use it to take your trade, and you see that you will make money. Imagine this one. Look at this one. This one is killing. Look at it. This one, when you see this one, don't even think twice. Look at it. Number one, this place is a resistance. Can you see this place? The whole of this place is a resistance, 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 resistance. And then number one, it gives you a doji star. Number two, it gives you a hanging man, which is the opposite of hammer. Look at these two candlesticks. Watch them very well. And then number two, these two candlesticks also form what we call a twister top. This is many confirmation. The confirmation is two. One, it is coming from a resistance zone. It gives you a doji star to sell. Three, it gives you a hanging man to sell. All this pushes the market down. Look at how terrible the market fell from here all the way down. And as the market is falling, see, this is continuation sell. Look at it. I see this doji star. Continuation sell. Sell when you get here, add another sell. Look at this one. This one is evening star. Look at it. Evening star, bullish candle, indecision candle, bearish candle that breaks the low of the bullish candle. Evening star candlestick pattern. Sell the market. Sell. See the way these things are driving the market. Okay.
Yeah.
So it's very important to to understand the candlesticks. Okay. Because the candlestick is referred to as the oldest indicator. Okay. The oldest indicator. Right? Look at it,
Yeah.
look at it. Look at this one. Gravestone, the one I was telling you that time. Gravestone doji. Look at it.
It's called
Um,
gravestone.
a gravestone doji is a doji that does not have a wick on the up or the on the upside. Okay, so let me see. Okay? We're not talking here, but let me see if we have it here. If we have it here. Okay, no, that is. I will show you. Okay, so you see like this one now. This is
Yeah.
gravestone. Okay, look at this
Mm.
one. This is gravestone. This is bullish gravestone doji. This is
Mm-hmm.
bearish gravestone doji.
Yeah.
Look at this. This is another bearish gravestone doji. So you see
Mm-hmm.
gravestone doji here, it moves the market. You see gravestone doji here, it moves the market. You see gravestone doji here, it buys the market. Isn't it? So a gravestone is when the market opens and closes almost where it opens from. Okay, whether bullish or bearish. Closes almost where it opens from. You will not see a wick on the other side, like the normal doji star that you see wick, small wick
Mm.
on the other side. No. So you will not see any wick on the other side. It is called gravestone doji. Spinning top. Spinning top and indecision candlestick. They don't tell you whether the market is going to buy or the market is going to sell. Okay.
That's these two candlesticks are called spinning tops.
Yes, these two candlesticks. Whether bullish, whether bearish. The wick to the upside and the wick to the downside, they are almost equal. And
Mm.
then you have a little, appreciable body, unlike the doji star that doesn't have so much, in the body. So this one
Yeah.
have little small body, but it suggests that the market is not going to go up or going to go down. So these are examples, okay, of look at this one. Okay, look
Mm.
at this one. Look at this one. These are look at this one. These are a good example of indecision candle.
So is this hammer that is called a gravestone?
Sure.
Hammer. That's the third one to
No, AMA is not graceful.
right. Is it
AMA is
different?
not graceful. So
Mm.
see the difference between AMA and gravestone. See AMA. See AMA. This is AMA. AMA
Yeah.
has body. It has small body. Gravestone does see gravestone. Gravestone is like this, but without this wick. This wick is
Yeah.
not there.
Okay.
That's gravestone. The
Mm.
body, the difference between the close and the opening is very small. But in
Mm.
AMA, you have a head that looks like normal arm. Okay, it's
Mm-hmm.
just like you put the bottom here, and you're using it to eat something. Okay, that's why it's called armor.
Mm.
that. Let's go back to where we were. So this is the decision candlestick. Then this is the hammer. So the hammer and hangman are two opposite type of candlestick formation. Okay.
It indicates a potential reversal.
And that?
Indicates a potential reversal.
Yes. It's a turning point. Remember I told you yesterday, I said the candlestick pattern or the candlestick formation, they are turning points in the market. Okay, so why the hammer we cause the market to buy, the hangman we cause the market to sell. Take note. The hammer will cause the market to buy, the hangman will cause the market to sell. Okay, is it making sense?
Yes.
Okay. So look at your chart. Hangman, hammer, hammer. Okay. Okay. Okay, so what we'll be dealing with are candlestick patterns that move the market, but they are single candlestick. So just like we have the single candlesticks that we can use to make decisions, we also have the double and we have the triple. Okay. So we can combine the candlestick to make decision. Okay. For instance, if you look at my screen, we have decision candlestick. There are two. That is, we have a strong bullish candle, and then we have a strong bearish candle, which is two. Then we have the spinning top, which is three. Okay, the spinning top is a candlestick that shows that the market is neither going up nor going down, right? But then we can use it to make decision, because if you look at this evening star, okay, evening star, you have a decision candlestick to the up, okay, then indecision and indecision candlestick to the down. Okay.
Yeah.
Okay, so I want you to understand this candlestick pattern. This is the evening star. Evening star is a bearish candlestick pattern. So it goes like this. A bullish candlestick is formed, followed by an indecision candlestick, and then followed by a bearish candlestick. So this bullish candlestick is a decision candlestick. This bearish candlestick is a decision candlestick. This spinning top is an indecision candlestick. So you have decision coming from the down, followed by a set of indecision candlestick, and then a major decision candlestick follow. That's it. That's an evening start. The market will sell. Ideally, it looks like this: bullish, indecision, bearish. Sell. Okay. All right. But now, most times, this is the ideal situation, and this is the realistic situation. So you may not see bullish, indecision, bearish, but you may see bullish, indecision, 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 bearish. Is still an evening star.
Okay.
Okay. So you can see example there.
Yeah.
Right? So there are 5 candlesticks that MTI, from their research, has found as the most occurring candlestick in the market. Most occurring. There are 5 of them. We have it both for bullish, and then we have it for bearish. Okay. Let me just so so we're going to take the 5 candlesticks, but let me switch this slide to second slide. Yeah. But let me just switch this slide. So talking about candlestick formation, so I want to use a different slide. This one has everything. Okay. So we've talked about the candlestick, talked about the decision and indecision candlesticks. Okay. And then talked about the doji star, talked about the dragonfly doji. Okay. Okay, yeah. So this is the gravestone doji. Okay, what we talked about before. So you see the gravestone. On the upside, there's no wick
Yeah.
for the bullish gravestone and then the bearish gravestone. There's no wick to the up, there's no wick to the down. Okay. So what it means, if you want to explain it, it means when the market opened from here, the market came down, down. That means that there was so much bearish pressure to the downside,
Yeah.
but that bearish pressure was not enough, significant enough to hold, and we have the surge of buyers into the market, and those buyers now drove the price up, drove it up, a little bit above the opening position, and then that candle time finishes. Okay? This is a great one. So what normally happens, the next candlestick that will come will be a buy candlestick. Okay. But now, this is contingent on the fact that it is coming from a support area or support zone, or either support zone or a resistance zone. Okay, so it's either coming from a demand zone or a supply zone. So like this one, like this a Greystone Doji. Okay. Talk about spin it up, don't move the market anywhere. Then hammer, an inverted hammer or hanging man. Hammer is a bullish candlestick, while hanging man is a bearish candlestick. So both of them are opposites. Okay.
Yeah.
So anywhere you see hammer, in as much as it's coming from a previous, so we're talking about combining the candlestick. We've talked about this on the last slide. So I will say this is the ideal situation. This is the realistic situation. Okay. So yeah, the Buddhist candlestick formation. So there are 5 candlestick formations, okay, that occur most in the market. And for bullish, one is a bullish shooting star.
Bullish shooting star.
Okay, so what happens is when the market forms a bullish shooting star, the market will buy from the next candle that will form.
Automatically.
Yeah. In as much as you're able to identify this, automatically. That's the bullish shooting star. And then the, the next one is the bullish morning star. So for the morning star, just like I explained for the evening star, you have a bearish candlestick coming down. This bearish candlestick is a decision candlestick. Then followed by an indecision, boom. Okay. A a morning, a morning, a bullish morning star. That's what you are seeing here. Okay, so bearish, indecision, bullish. Okay, so bullish morning star is a buy candle. Okay, so as soon as the morning star finish closing like this, you want to buy the next candlestick that follows. So the same way that like the way the bearish form is similar way. So you see the bullish shooting star, bearish candle, indecision, bullish. Yeah, bearish. So this is the ideal situation we talked of before. This is the realistic situation. So the PSC line is a bullish candlestick where you see this candle, it closes at least 60% of this candle. That's the PSC line candlestick.
Mm.
So you understand the PSC line concept. Look at it. It means that minimum this candle
Mm.
bullish engulf. So bullish engulf is when the candle engulfs at least 2 to 3 of the previous candle.
Mm.
Bullish engulf, similar way. You see the market coming down, down, down. Then all of a sudden, you get one strong momentum candle like this one. Okay.
Yeah.
Now the next candlestick is the tweezer bottom. So the tweezer bottom is a bullish candlestick. Okay. Tweezer
Mm.
bottom. We also have the tweezer top, which is a bearish pattern. Okay. So if you look at the tweezer bottom, there's a unique feature about the candlesticks. So it doesn't really matter the way it appears. Okay. Okay. Let's see. Tweezer bottom. So look at the ideal situation where you have two candles and they are roots coming from the same place. Look at it. Okay. So See, for this tweezer, look at the key takeaway. You see where the wick of the candle is. I see where the wick of this one is, the green one, and then
Mm.
the red one.
Mm.
Okay, that's the critical thing. We want to see that the two candlesticks they are coming from like the same zone or the same area. Okay,
Yeah.
and so this is the hammer. See that? So hammer has small body, but this wick must be 3 times the size of the body.
Mm.
Charging post, yeah. That's like three white soldiers. There are lots of names for it. Okay, so the three white soldiers. So when you see this, get ready to buy.
Mm.
Then the bullish spinning top. Okay.
Yeah.
See this one is a spinning top and it's immediately followed by this bullish one. Bullish three star. Okay. This one is okay. It really happen, but once it happens, and move the market, you have a very massive bearish candle followed by all this exhaustion. So for the bearish, it's almost the same thing. So you have the bearish shooting star, you have the bearish evening star, so the dark line is the composition of the TSL that you
Mm.
saw. So this how it looks like. Trading view. See the same way you have the freezer to you also have the freezer to. Okay.
Yeah.
Yeah. So the bearish argument. When you see this now, you need to make sure that you are seeing it and it's coming from a supply zone. All the bearish candlestick formation, make sure that they are coming from the supply zone. Then the
Mm.
bullish candlestick formation, make sure they are coming from a demand zone. That's where it makes more impact. Okay.
Yeah.
So now let's head to the chart. So now that you have seen the candlestick pattern and the candlestick formation, what do you want to do? You want to look for them on your chart. Okay. So this chart is a good one. This very chart we're looking at now. Let's see where it starts from up. Okay, let's go like this. So if you just pick your chart and you are looking through your chart, you can easily figure out, these patterns. And
Mm.
like what we are doing as scrolling is more like looking like a back test, right? Seeing what happened in the past. Okay.
Mhm.
But if you really take time to look at your charts, you will see all these patterns. So this market started selling from here with a perfect angry man. This is the angry man, right? That's a sell, and this market started. But in the process of selling like this, you know, it got to this point, created all these nice resistances, okay, very beautiful resistances. And then market come back to this resistance and it gave you a butterfly doji and a dragging and a angry man. Okay. These
Mm.
two, this is a dragonfly doji, this is a angry man, and both of them forming tweezer top. Are you seeing it?
Yeah.
Tweezer top. Okay. So this signal is a very strong signal.
And they are on the same line, same
Yes.
level.
Coming is number one is coming from a resistance zone. Number two, there's a dragonfly doji. Number three, there's a angry man. All of them signifying that the market is going to sell. And see how well the market sold. See how well it's.
Mm.
Okay, so is this something that you think you can on your own figure out from the market?
Yeah, if I get very conversant with them, if I go through it again one more time, I will.
Yeah, you need to take time to go through it over and over again, and then
Mm.
get used to it. So like what we are doing now, this is 1 hour. If we switch this chart to say uh switch this chart to say 4 hour, okay,
Mm.
you can still see. Look at this one. Oh my God, this is so fantastic. Look at this one. This is a demand zone, right? This is a
Mm.
good demand zone. And then the market can create for you a perfect hammer candlestick. Can you see this hammer?
Yeah.
This is what drives the market. In fact, it drives the market crazy. Drove the market crazy. And then this buy that the market bought, eh, in fact, there are so beautiful reasons why the market bought. Number one, this is a demand zone. Then comes a hammer candlestick, the market bought, right?
Mm. Mm.
Then the market come here. This is a this is a this is a resistance, on support here, and then the market gives you a bullish candle.
Mm.
This is also a resistance, on support here, and then the market gives you a buy with a dragonfly, and then you bought, and the market run. Okay, since that was not enough, the market also come back here, and then the market form um, uh, inverted hammer here. Okay,
Mm-hmm.
so like bullish candlestick, and then the market run. Okay, so you can just look at the market. Even this one that bought this place that bought here, if you look at it carefully, look at it. This is a resistance on support. But here comes the dragonfly doji. This bullish one. So the market will run like that. Okay,
Yeah.
take clear.
Yeah, it is.
If you switch to daily chart, okay, you can also source for things like that. Look at this one. Look at this. This is a demand zone, right? Then the market come and form what you. Number one, this is a uh, this is a shooting star candlestick formation. One. Number two, this is a bearish uh, doji followed by bullish. This is morning star. See how the morning star drove the market all the way.
Yeah.
So if we go back in time, we'll still see some more places and even more reasons why we should buy or sell. And this one, bullish, indecision, bearish, even star. So look at this place now. This is bullish, bearish, sell, right? Bullish, bearish, sell. So that's basically how you take advantage of the candlestick to see what's happening, in the market. Let me see. Down. Say this is a twin of see how well it move the market downside. Okay. So that's it for candlesticks. So basically, it just to familiarize yourself. So one thing I tell people is if you go to Google, for instance, let me do something. Go to Google and say candlestick big pattern, right? And it's going to bring a whole lot of stuff for you. For the selling candlestick. That's it. That's it. Just go to news. So now, if you pull this one, for instance, not here, right? So these are different candlestick patterns. A whole lot. They have so many. Okay. So you take your time, just play with them, fumble with them. Okay. Try to understand them. But then, very importantly, you you want to familiarize yourself with these five that we just talked about. These five that we just talked about. And a summary of them is on the manual. Okay. Look through the manual, you see some of them. Those five, according to MTI, they say they are the most occurring. Okay. Let's so look at this one. See this one now, this shooting star. See how it's steady market. This one is dark cloud. Okay. See this one bearish engulf. See this one angry man. See how it's the market. This one great sound. Okay. Freeze that up. See freeze that up. Okay. Evening star. Three white soldier. Three white crow. Okay. So uh, you can try your hands on candlestick. Let me see if I have this. Can I just take any check? This is 1,000. Okay. So look at this 1,000. This is 1,000. Let's see. go back and see if we can find some, that has moved the chance in the past that made sense. Okay, yes, come on. Look at this one. Okay, so let's just go back in time and see. Wow, look at this gravestone. Look at this gravestone. Can you see this one? Yeah, where they moved. Same with this one. Yeah, where they moved the market. Look at this one. Same thing. Yeah, where they moved the market. Okay. Look at this one that moved the market. This one. Okay. Look at this one. This one is so fantastic. Watch this. So this is your resistance zone. See that? It's your resistance zone. And then this market came here and gives you this, will give you uh this dragonfly, right? Then immediately the market dropped massively. So if you are patient, you have to be patient, right? If you are patient, you know that this is a you know that this is a supply zone. Then by the time the market comes to the supply zone and it's giving you this kind of candlestick pattern, okay? And here's another beautiful one. But just look at where it's coming from. This one, fantastic. This is also coming from a demand zone. Okay, get it. Perfect move. Okay. So I mean, for candlesticks, it's simple. You just go about it, like this, and then when you now do your when you do your analysis, okay, by the time we deal with Fibonacci, you will understand it better. You'll be able to use it to do your analysis, and then you know the area where you are expecting to see this candlestick pattern in order for me to make good sense to you. Okay. So do you have any questions on this candlestick?